All right, let's dive right into one of the biggest questions in finance today. In a world that feels more uncertain than ever, how do you actually protect your wealth? For literally centuries, the answer was simple: gold. But now there's a new player in the game, a digital disruptor that has completely entered the ring: Bitcoin.
So this is the question, right? It's what everyone is asking. Should I buy gold? Is Bitcoin the future? Is this stock too high? Is that one too low? The answer isn't as simple as just picking one over the other. To really get to the bottom of it, we first have to understand the fundamental problem we're all trying to solve.
Okay, so to get the why behind this whole debate, we need a simple but really powerful idea. Let's call it the currency teeter-totter. This is going to help us visualize the core challenge that every single one of us faces with our money. I want you to imagine your net worth is perfectly balanced on a teeter-totter. On one side, you've got your dollars. But here's the problem. Thanks to things like inflation and, let's be honest, massive money printing, the buying power of that dollar is always under this constant downward pressure. I mean, just think about what a cup of coffee or a tank of gas cost you 10 years ago versus what it costs today. So to keep your net worth from just crashing to the ground, you need something on the other side of that teeter-totter, a hedge asset that goes up in value as the dollar goes down. This is the whole game right here, finding the right asset for the other side of that teeter-totter. So here's our game plan. We're going to start with the problem, then we'll look at our two main contenders: gold, the old guard, and Bitcoin, the newcomer. We'll put them head to head, and then we're going to challenge the entire question before we reveal what might just be the single most valuable asset of all. First up, the original wealth shield, the asset that has outlasted empires for thousands of years: gold. This quote just perfectly nails the purpose of gold for so many long-term investors. It's not about making a quick buck. It's about playing the long game. It's like an insurance policy you hope you never, ever have to cash in, a legacy that you pass on to the next generation. And this is exactly why it's endured for so long. For over 5,000 years, through the rise and fall of civilizations, gold has been this universal store of value. It's physical, you can actually hold it in your hand, and its supply is limited by geology itself. You can't just print more of it, you have to find it and dig it out of the ground. For millennia, it's been seen as the ultimate shield against a total currency collapse. But, and this is a big but, here's the classic counterargument, one that's often tied to Warren Buffett. Gold doesn't do anything. It doesn't produce cash flow, it doesn't pay a dividend, it just sits there. You're basically paying to move a shiny metal from a hole in the ground to a different, very secure hole in the ground. It's a totally unproductive asset. Okay, now let's turn to the digital disruptor. Bitcoin was literally created to solve the exact same problem as gold, that whole devaluing currency thing, but it comes at it with a completely different, totally 21st century approach. So the most important thing to understand is this number right here: 21 million. There will never ever be more than 21 million Bitcoin in existence, period. This isn't a physical limit, it's a mathematical, unchangeable limit that's written right into its code. This is what its supporters call absolute scarcity. And that scarcity is paired with some pretty incredible features. It's decentralized, so no single government or bank is in charge. It's incredibly portable. You can move millions of dollars across the entire globe with nothing more than a private key. And it's all built on the blockchain. Just think of that as a global public receipt book that can't be forged or changed by anyone. That's what makes it a direct competitor to global currencies. Okay, so now that we've met our contenders, let's put them in the ring. Let's compare them on the factors that really matter for a true wealth shield. Let's start with scarcity. Gold's scarcity is, well, it's variable. If the price of gold shoots up, companies are going to invest more money into finding and mining it, which increases the supply. With Bitcoin, the scarcity is absolute. The supply schedule is fixed, it's known by everyone, and it cannot be changed. No matter how high the price goes, you simply can't create more. Now, what about risk? Well, a big one is government intervention. And look, this isn't some conspiracy theory. This has actually happened. In 1933, the US government literally made it illegal for citizens to own gold and confiscated it. After World War II, the French government just went and nationalized entire industries, including the banks. History shows us that when governments get desperate, private assets are not always safe. And hey, don't for a second think that Bitcoin gets a free pass here. While it's certainly harder to confiscate, it's not impossible. Governments could ban the exchanges, they could tax it into oblivion, or regulate it until it's useless. This is a very legitimate risk for both of these assets.
But Bitcoin faces this unique risk that gold, after 5,000 years, really doesn't have to worry about anymore, and that's technological obsolescence. Economists have a great term for this. They call it creative destruction. It's the process where new innovations are constantly destroying old industries and technologies. These analogies just perfectly capture Bitcoin's big technological risk. Vinyl records were the dominant way to listen to music until they weren't. Sirius satellite radio was supposed to be the future of audio until podcasts came along and became mainstream. So the big question for Bitcoin is, what if a new crypto protocol gets invented that's better, faster, and more secure? It is a real possibility. So after all that, which one is it? Who's the winner, gold or Bitcoin? Well, what if that's the wrong question entirely? Let's just shift our focus for a minute. The debate isn't really about picking the single best asset. It's about building the right skills so you can analyze any asset that comes your way. This four-pillar framework is universal for any investment you'll ever make. First up, fundamentals. Do you truly understand what this asset is and what its long-term value proposition is? For a stock, that means its earnings and its leadership. For Bitcoin, it's the security of the network and how many people are using it. Second, technicals. Can you read the charts and understand how investor psychology, fear and greed, is moving the price day to day? Third, cash flow. Does this asset actually generate an income, like dividends from a stock or rent from a property? Gold and Bitcoin famously don't, which is a key part of analyzing them. And finally, and this is the most important one, risk management. What is your plan to protect yourself if you're wrong? These four pillars, they apply to everything: stocks, real estate, gold, and yes, Bitcoin. And this brings us to the final, and I think the most important, idea of this whole discussion. If it's not about the asset itself, then what is the true key to protecting and building your wealth over the long run? And this, right here, is the ultimate takeaway. In a world where some new technology could disrupt Bitcoin or a new government policy could totally change the game for gold, the most valuable asset you can possibly own isn't an asset at all. It's knowledge. It's your financial education. It's the ability to learn, to adapt, and to apply a solid framework to make smart decisions, no matter what the world throws at you next. So I'll just leave you with this thought. As you build your own financial future, are you just betting on one single asset to save you? Or are you investing in the one thing that can help you navigate any market and any change? The choice and the work is yours.